5 tips for mortgage renewal time. Most mortgages need to be renewed at least once, before they're eventually paid off. Unless you have the cash to pay off your balance in your first mortgage term, you're likely part of the 36.3% of Canadian homeowners who carry a mortgage and must renew it at the end of their term. A mortgage renewal is simply the process of taking the outstanding balance of your mortgage and renewing it for another term at a new, and hopefully lower, mortgage rate. If you don't already have the maturity date, the date your mortgage term ends, penciled into a calendar, you'll know it's time to renew when your current mortgage provider sends you a renewal slip in the mail. The slip includes a new mortgage rate and term offer, which you can sign and send back. However, it's in your best interest to take a more proactive approach. Here are our top mortgage renewal tips. 1. Consider your current financial goals. Before you sign your mortgage renewal slip and send it back, you should first review your financial goals. You want to be sure your current provider can offer a mortgage product that suits your needs. For example, if your current mortgage term is a 5-year fixed rate, the renewal slip will likely be for another 5-year fixed. If you think you'll stay in your home for that amount of time, great. But if you know there's a chance you'll downsize or potentially move to a new city in the next few years, you may want to look for a 3-year product instead. Other financial goals to consider may be how extra money, like an inheritance, could affect the prepayment options you want. Also consider whether it makes sense to refinance your mortgage or get a HELOC to access equity. Knowing what you need in a mortgage should help you form the decision around which lender and product to choose. 2. Start to shop around early. Just how soon can you renew a mortgage? Sure, you may be a few months away from your mortgage maturity date, but they say the early bird gets the worm. This phrase rings especially true with the mortgage renewal process. While your current lender will likely send you that renewal slip sometime in the last 30 days of your mortgage term, you can usually start negotiating as early as 120 days before your maturity date. To ensure you're ready, find the maturity date in your mortgage contract. It may also be visible through online banking, and count 120 days back on a calendar. If you can't negotiate a better offer with your current lender, this gives you time to start considering switching providers. You may not be able to switch your mortgage over until your actual renewal date arrives, but this gives a mortgage broker time to give you mortgage renewal advice and find the best product. It also allows time to get the paperwork ready, so you're not left scrambling at the last minute. 3. Ask for a better mortgage rate. With those little mortgage renewal slips, lenders make it too easy for you to answer the "should I renew my mortgage now?" question, by providing a quick and easy way to renew. They know you're busy and that you'll pay for this convenience. On average, mortgage providers only offer their existing customers a discount off their posted rate on a renewal slip. But this isn't the lowest possible rate, even from your current lender. On top of that, there are usually lower rates available from other lenders. Negotiating mortgage renewal for a better rate becomes even more important in a rising rate environment. 4. Get a rate hold. When you shop around for a better rate, a good strategy is to use a mortgage broker. Rather than having to go from lender to lender, a mortgage broker can pull your credit report once and find a list of lenders who will work with you, and the best rates they can offer. Your mortgage broker can quickly tell you what rate you could qualify for if you choose to switch lenders. This process can happen very quickly, often at the first appointment. Your mortgage broker can quickly tell you what rate you could qualify for if you aren't ready to make a decision. For example, if you want a chance to let your current lender match that rate, ask your mortgage broker for a rate hold. Rate holds protect you from interest rate increases for up to 120 days. If interest rates go down during that time, don't worry, you can negotiate down to that new lower rate, too. Rate holds lock in the rate if you're worried rates will rise before you're up for renewal. 5. Give yourself time to switch lenders. If you decide to switch lenders, you may be wondering, when should I start looking to remortgage? The answer is as early as possible. You'll need to submit a mortgage application as though you are applying for a new mortgage, which means you'll need to provide documentation including copy of your mortgage renewal letter, proof of income, proof you own your home, proof of property insurance, It usually takes a mortgage broker over a week to process your application, so make sure to leave plenty of leeway between when you start the process and when your mortgage is due to renew, otherwise you may end up sticking with your current lender for your next mortgage term. The risks of not shopping your rate. It may seem like a lot of effort to shop around for a new lender, and the payoff, saving a few percentage points off your mortgage rate, may not seem worth it, but not shopping around could leave you financially vulnerable. This vulnerability is due to something called interest rate risk. Interest rate risk occurs when your mortgage is expected to renew at a higher rate, putting more financial strain on your budget. According to the Bank of Canada, about 53% of households were subject to interest rate risk in 2018. Interest rate risk occurs in 3 scenarios for homeowners in Canada. If you have a variable rate mortgage, rising interest rates affect you immediately. If you have a fixed-rate mortgage coming up for renewal. If you have a home equity line of credit with a variable interest rate. In these cases, renewing your mortgage at a higher rate, or refinancing to access equity, could add hundreds of dollars to your monthly mortgage payment, as we saw in the example above. Whether you are choosing renewal versus refinance, the bottom line is the same. These hundreds of dollars could be the difference between paying down debt and just making ends meet. For this reason, it's important to take the time to shop around for the best mortgage rate. Your financial prosperity depends on it. The bottom line. Renewing your mortgage can be quick and easy, but signing that renewal's best mortgage rate or product slip and sending it back won't get you. By following these tips, doing your research, and working with a mortgage broker who can provide you with mortgage renewal advice and tips, you'll get the best lender, terms, and rate for your current financial situation. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Source: ratehub.ca